Hey guys, hope you guys had a good day trading today. Today was FOMOC Minute Day. There was quite a few highlights from FOMOC Minutes in general. The biggest things I'll highlight real quick here, and I put it in the written TA, but from a dovish standpoint, really the only biggest thing is that they're afraid of financial instability if they tighten too much. And they also say that most people do agree that there should be a slowing of pace increases soon, but there's no date on that. Really, the biggest hawkish things is that the federal funds rate is probably going to continue to increase and be very restrictive, and they don't really know what that level will be. And they also basically want to wait and see more signs, or really any signs of inflation actually decreasing before they start decreasing. And like I said, they don't really have the final destination for the federal funds rate will be more important than the actual pace of hikes. But biggest thing is really that with inflation slowing, little signs thus far of abating, and with supply and demand imbalances in the economy persisting, their assessment of the ultimate level of the federal funds rate that would be necessary to achieve the committee goals was somewhat higher than they had previously expected. So markets really took this as pretty bullish today, to be completely honest. I mean, you can see this was a release right here, and we popped through it. This was a pretty wild candle right here, but we came through it, and we ended up staying up here, but we just kind of magneted right to this like 402.2 to 402.5 level. I'm kind of surprised how well markets took that. I mean, in my opinion, that news was not bullish at all. I mean, that was very hawkish. That was very much so everybody agreeing that we haven't reached our peak rate yet. We don't know what peak rate's going to be. And yes, we will eventually want to slow down rates. There's no time frame on when we're going to slow those rates down. I mean, there's still nothing saying that next meeting we don't get a 75 basis point hike. While the market has it priced in now, about a 70, I believe, last 70 to 80% chance last time I looked of a 50 basis point hike. I'm a little surprised by this reaction. So now that FOMOC minutes is out of the way, we really don't have anything participation or like really big moving wise until Jay Powell speaks next. I think it's Friday the 30th, next Wednesday. Jay Powell's having like a little conference thing. And then besides that, there's really nothing until FOMOC and CPI in December. So looking at this here, we're in this nice rising bull channel right here. We have a really nice rising wedge. Until we break this rising wedge and we break below the daily 8 EMA, and not just like break like this, but like close below it, like think here sort of thing, I'm bullish. I was very much so too bearish today, and I burnt myself because of that, and I missed my play on FOMOC minutes because I didn't trust my own TA that we were actually going to keep pushing forward. I really expected the markets to take that news based on how they reacted to FOMOC as bearish, and I talked myself out of a really good play. But we closed over the 200 EMA for the first time since August. With that, and now establishing 399.4 as support, we really are looking for this push up here. I am looking at 405.4 as our next major resistance to touch. And this is the bear market resistance right here, which perfectly for Friday at 409.7 is the rising wedge resistance and the bear market resistance. We very well could see it'd be about a $7 day, which would be about a 1.5 to 2% day. We very well could see that on Friday. We could come up here and touch this and then either reject down, or we could close up here, and then on next week we could look for a push up. However, if we continue to break down and we lose support here at 401.2 for the 200 EMA, then I'm going to start looking for support back down here at 396.6, and really the last line of support is 394.4. Looking at futures, same thing here. We broke through. We touched 40 really at the top. We broke over, and we will close over the daily 200 EMA here. We broke out of this nice level here. And really looking at futures, this looks like a really, really nice bull flag. You can see we had a nice move up. We chopped, and then we broke out. And here we are breaking out. So we should see a move up here. I'm looking for ultimately about 40.90 on futures for next big resistance. Key support is right here at 40.10 and followed by 39.55. So looking at Tesla, very frustrated with myself today with Tesla. If you read the written TA, and I think I talked about it last night in the video too, but I was expecting a move up based on the number of days and how much Tesla has broken. So I played that because we broke through here and we were rejecting right here, which was 380.2 was a nice big resistance line on Tesla. And this morning we were looking pretty bearish when we got there right here. Where am I at? Right here. So we got up in this range and we were looking like we were going to retrace, and then we had a breakout, and then we started doing it right about here. And this is where I expected us to continue to break down, but we ended up pushing up, and I had taken some puts here because I was expecting a retrace back down to this like 173 to 174 range. You can see this line right here. This is like the volatility where we should be, really last supported area. And I missed my exit here right before FOMOC minutes. I hit about -5%. I was down quite a bit. I should have closed it, but I was looking for that bigger breakdown. However, as you can see, we came down, touched 20 EMA, and bounced really well. This is another example. I was far too bearish today, and it burnt me. I had too much of a bias, and I couldn't play what was in front of me. So we broke through this falling wedge here, this falling wedge here. So we effectively look like this now. We have one nice falling wedge going here. So based on the previous pops of about 3 to 4 days, and I think it's about a 15% pop. I'd have to go back and look at my numbers. I can't remember off the top of my head right now, but I'm looking for somewhere between right here at 187 to 191. So this really was the range I was looking at based on how much it said we should go up, which I'm just going to pull up real quick to give you a better number. Sorry. So we should be looking for about 11.8% pop over 4.2 days, which really puts us between this 185 right here to 186.7. So we are getting pretty close there, but we did close over the daily AEMA for the first time since all the way back here in November 1st. So I'm going to be looking for more of an upside push here, and I'm going to be looking for, you can see right here, kind of this daily 220 EMA rejection here. We're kind of looking at a pattern similar here. We had the breakdown, we popped, closed over it, and then we kind of rode it up until we finally hit the 20 EMA, and that was pretty much our resistance before the next leg down. So I am looking for that. I am playing some calls to the upside. There is potential here with SPY and with Tesla that we could see a bigger push up here and a bigger recovery. But we'll just have to kind of see what happens really on Friday and the next week. So, but I am more bullish right here to at least to this 187 to 191 range. However, if we reject hard and double top here, we're going to be coming back down and we're going to be testing this 173.6 support. And we did leave a little gap down here all the way down to 170.92. So looking at the VIX here, we had a big unwinding today. And you can see we are just riding this daily AEMA all the way down. We are finally getting to this 19.75 level, which if you look here, every single peak has touched or just below this level before it hit. This was the beginning of the bear market. This was the March, April peak, and then this was the August peak. So we are finally getting to that level, and I fully expect us to get there, and I fully expect this to pretty much signal the bottom. So what I'm looking for is more or less a touch either this week at 411.1 or next week at 409.4 and the VIX below 19.7, and I will consider starting to open a long put position. But until that happens, I struggle to be bearish, and I'm just going to play what's in front of us and try to tilt to the bullish side that we're on right now. Bitcoin has also broke through this resistance line here, and we are now almost looking like a cup and handle could be forming here. But we are looking to take out the daily AEMA for the first time since November 7th. So this has been a long time that Bitcoin has been under its daily AEMA here. So we could see a nice recovery, which should push the markets up with it. All right, I hope you guys have a really great Thanksgiving. Spend some time with family and friends. And I will see you guys back on Friday for a half day. Thanks for tuning to this video, guys. I hope you guys enjoyed it. Don't forget to hit that subscribe button to stay updated to my videos. This is the Lifetime Discord link. If that does not work, go ahead and drop me a comment or send me a message and I'll get you a new one. On the Discord, I do pre-market update with key supports and resistance from overnight. I also do live analysis and commentary throughout the day on SPY and Tesla. And I also do my live alerts for call-outs for plays that you guys see in my daily log. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh.